sir, for a wonderful learning session. Thank you. Manish sir.
Yeah, hi, very good morning to all of you. And it's being Sunday, I know like it's been very difficult to wake up and attend session. And today, this session is very interesting session. We talk about the startup valuation, how to evaluate the startup, and it's being more of, I would say, a very challenging thing to evaluate the startup, right? Until and unless the shares are not listed, and if you are evaluating what should be the benchmark, how to go about it, what to look into it, there are different facets that we need to look at. Okay. Now, when I say valuing a startup, my work should start from where, I would say. Should it start from projections? Should it start from provisionals, financials? Maybe the company not having the audited financial just started. From where my journey need to be started? That is the first important question that is more relevant for the valuer to understand. And so before even going to the numbers, I would say that we need to follow the top-down approach. We need to look at like what is the entire industry is, what is the sector we're talking about, and what is the segment that we're talking about. So in this today's session, I will not be just focusing on like as a registered valuer, what we need to look at, what we need to do. This is a closed event between the valuers only. So the question is like at times there's a requirement to do the backward calculation. The valuer being told that this is the value at which the investment round is happening, and you find the value based on this. Then I would say that this is not a pure valuation exercise. This is more like you are doing the backward calculation and bringing the numbers on the table. Okay. But today's session, I will try to focus more on the real valuation as a valuer. You are not being told like what should be the value of my business, but you who look into all the dynamics, all the value drivers and say that, okay, this is how or based on your current positioning, this is need to be the value of your company. Then that makes more sense as a valuer, because you are then bringing something on the table and saying that I have looked into all the parameters, I have looked into the industry, sectors, segment, competitors, everything I looked into, and now I feel that the stage where you are right now, based on the stage, based on the other parameters like comparable company, competitors, what they've been doing, based on the stage where you are, that is the value that you hold right now. Because my whatsoever I've been providing as a valuer valuation exercise to the founder or the promoter, this should not be just the piece of paper and saying that okay, this is the value of the company. It should something which makes sense, which based on certain assumptions, certain logics, and then you can always talk like okay, based on these parameters my value being calculated, and then that will create more valuable to the founder of the company. Okay. Uh, so I would say like suppose we all being a valuer and we received a call from the founder and he's saying that I've been building something into robotic science, or I've been building something uh, into the blockchain technology. Now suppose I don't have a knowledge or a background in which the AI or the blockchain or this segment works and what are the value drivers. And so I just look at, okay, this is the projection that being provided. Let me apply our DCF and bring the value. Then I would say, sorry to say that we are not being the valuers then in that case. We just being as a regulatory exercise, providing the report saying that, okay, we valued because the investment round is happening at this price and this is the value of the company. So when I say any investment round happening, when a private, when the investor is investing into any company, that may not, we say that this is the fair value. Somebody's mic is on. Uh, Hello. So I would say that, okay, this because the investor has invested the money, so this is the fair value. Is it a right concept, wrong concept whatsoever? Though I believe that it's certainly sets a certain benchmark number, that okay, this based on this investment that is taking place and so much of the dilution of the stake, the value is this much. But that certainly may not be the fair value. Because when I say the investment round is happening at a private level in a private company, that is a notional value that being created. The notional value based on the interest of the investor. Maybe today the investor may be feeling very good about particular segment and say that, okay, the values need to be this. But maybe tomorrow a bad news for the sector comes and immediately the value falls down. Okay. So it all depends upon like fair value may be fair for one set of investor, may not be fair for the other set of investors. There may be three VC firms, suppose, and these three VC firms are looking at making investment. Somebody would say, give a proposal that the value of the company, I look at maybe $1 million. Somebody would say $0.5 million. Somebody may say $2 million. That all depends upon like what is the thought process, what sort of portfolio those investors are having in set of companies they are having. So there are a lot of the factors beside the number things which depends upon like what should be the value of it. Okay. Suppose somebody comes today and says that, okay, I also wish to start a company like Ola or Uber, then we need to understand like you cannot go and say that because these are my comparable companies and based on the comparable company, my value should also be this much on day one. They have traveled a certain stage. There are different round of investment, a lot of thing being done. They got a lot of patent thing they have undertaken. So based on these, they have the value. Then they have the traction, they have the market, they have the consumers who are using it. So this has created a value over a period of time. You cannot come today and say that, okay, this is the value of my company, and because these are my comparable companies. So when I need to understand the value of my company, I need to understand from the stage where we are. So I need to go back and look at when these companies have started at that point of time, at the initial level, what is the seed stage, at a pre-seed stage or at a seed stage, what is the level of investment taken place based on certain revenue? As well as that may not be again the right parameter because the industry has changed. The industry has evolved and gone to the different level. So maybe even if you start the journey today, because these players have become so big, you cannot survive in this market. You cannot because the economies of scale may not work. That if you look into that is something very surprising. Whenever I used to come from airport to Noida here in Delhi, hello. So whenever I used to come from airport to Noida to my home, uh, what is happening about a year back, the prices, the charges of Uber or the Ola was somewhere roughly close to 1,200 rupees in the night. And now surprisingly, it has came down to 750, 780. That is the price that being there right now. So I felt like why this thing happening? The reason being because there's a right now they're feeling that okay, this is the time. Now we again have to expand. We again have to create the leadership because there are only two players, major players that been left, and then there's an electric one, which is the blue, that smart blue that being third. So it all depends upon the stage where the things are moving. Okay. Uh, about 4 or 5 years back, there was a lot of buzz in the market regarding the crypto. Everybody is talking about crypto. Have you invested? Your friend may be talking. Have you invested it or not? At least take some shares. At least invest 10 lakh rupees in the crypto market. But the question is, and you see today what has happened to crypto. Now you look at the Paytm, uh, the company which has created such an immense impact in the market, but the type of the hurdles that it is facing, that is again maybe a question point. And one of the investor, big group that is saying that the value need to be slashed down to 60%, 250 something per share value they're talking about. So now what is right, what is wrong, very difficult to judge. It all depends upon the point of time when the things are happening. I've been doing as a valuer, I've been doing the valuation today. And if I'm doing it today, I may look into certain visibility factors based on today's scenario. Maybe 4 year, 5 year down the line, the entire thing what you have thought of may never able to lift up. Okay. So then I would, somebody may come and say, boss, you being the valuer, you have calculated or done the wrong valuation. It is nothing like that. Because I have valued it at a certain point of time based on certain assumptions. Nobody can challenge me that you have done a wrong or right. It all depends upon at a different point of time the things changes. Okay. So this again may be a very difficult thing, but as a valuer, I feel no challenge in that. Somebody says that you valued it and now you say 4 years down the line, the company has become bankrupt and you valued it so well. But actually, investment round has happened at that point of time. Investors are ready to invest at that point of time. So that may be the scenario. Somebody, if you look into like Adani factor, that when that report came, the prices have started going like rock bottom. And now again, you look into like how they are galloping at. It all depends like what is the scenario in the market is, what sort of news in the market, why people. There was a time when anybody who has talked about EV is able to secure the funding. Now there are so many players in the market. Anybody you talk, any of the when angel investment round you go, any of the pitch session you go, everybody is talking about EV. Then you go to any of the pitch session, everybody is talking about drone. Everybody in this world is building drone. But I have to understand like what is the usability factor? I was talking to one of the founder and he's saying that, sir, my drone comes at a cost of 4.5 lakh rupees. The question is, if we look at our farmers, whether they're able to buy it, okay, that may be again a question point. We are not into a cooperative farming sort of thing. Everybody has a small parcel of land. So until and unless you don't bring a solution on the table, which may be relevant for the right set of audience, you'll never be able to achieve the ball game what you want to. So we need to understand the unit matrix. And now everybody knows like uh, people used to be people used to feel very good about the revenue number, top line numbers, and now everybody is now coming down, not even going to the bottom or the pat level, but at least to the EBITDA numbers. Boss EBITDA positive कब होगा? 2 साल, 2.5 साल, कितने साल में EBITDA positive होगा? I need a storyline that way. I don't need to look at 5 years burnout, 7 year burnout. Company going to a IPO even at a loss. That those time have actually gone, and the scenario becoming more difficult because once you get listed, you need to publish the quarterly results, and negative, negative, and negative, it creates a negative environment. So for the new age companies that become more conscious approach that now required in order to go and explore the market, and that is more relevant, right? And let me share my little bit of presentation. Everybody I understand knows everything, so there's no point going deeper into all the like the basics and all. So I would touch base upon those things which may be relevant from the market perspective. Okay. Is my slide visible? Anyone can, is my slide visible?
Yes, sir.
Okay, fine, thank you. So everybody know price is what you pay, value is what you get. This is being the simplest statement once made by Warren Buffett. And but the question is, this is the real statement. When I say price is what you pay, value is what you get, and for different people, the price and the value varies from person to person. Suppose I being a data scientist, I understand more about the technology. I understand more about 4.0 or 5.0, world going into 5.0, where the machine can communicate with you. But a person who may be a chartered accountant, he may not be aware about all these factors, suppose. Then the question is, it all depends upon what is the value proposition you feel based on your experience. Okay. I was just reading one book, and it talks about uh, location, location, and location. It says that if you are in a Silicon Valley, the chances of your success will be 100 times more than in comparison to if you were even in the New York City. What's the reason for that? Why it being so? The reason may be because the market is matured enough well. If you look into the California, uh, there you find the right set of founders. If you look into it, start looking at like the top companies, it may be the Facebook, it may be Amazon, it may be Airbnb. Everybody sitting at the Silicon Valley. Why this being so? The reason being because the right set of things, the right set of guys, the right set of research may be present at that point of time. But somebody may say that, but the type of the unicorns that are coming out from India, now if you look at, there are so many things happening in India. Yes, of course, that may be. But the question is like, and today also one you must have all received on this in shorts, which talks about Raghuram Rajan was saying that Larry Page, uh, if he being Indian, the Google was formed in India because the advisor of Larry Page was Indian, and that was Sanjeev Motwani. So it all depends. So I would say that somebody who being sitting in India is not having such opportunity. Of course, he has the opportunity. If you look into any of the founders, unicorn founders, they all gone to the West, understand like what how the things work, and they try to replicate here in India. There's nothing new what they've been doing. If you say that they have come up with something very new, it is all things that being replicated from the Western part of the world, and now it being now because of the demand factor, because of the population size that we have, that is what is happening. I'm not negating anything, but that is how the market talks about. That is what even Raghuram Rajan was saying. So, uh, but one thing for sure, like this is the time when the policies are right, when the government is stable, when the world is looking at India. There was a time when we used to go to the foreign land, and somebody asked like, where you from? If you say India, you may not be so much appreciated at that point of time. But nowadays, when even if you go anywhere across the globe, people now start recognizing it. That okay, you are Indian. We know India. We know like how the Indian economy is doing. So that is the positive factor that has built into the environment, and we should all encash this positive factor. Right. Uh, I would say valuation, there's nothing wrong, nothing right. It all depends upon the assumptions that being undertaken by the valuer. Same set of numbers being provided to the two valuers, but based on the different assumptions, they may come up with a different value. So one is right, another is wrong, may not be relevant. The question is what sort of assumptions that you have taken that creates the entire value proposition. So I would say that things depend beyond the numbers, which is not only the numbers which speak, it is beyond the numbers. If you look into like a lot of people is secure the funding, just telling a storyline that this is what we do, this is what the market is, and they secure the funding that depend upon like, okay, this if things mature may become the billion-dollar company. So let me enter at this right time. Otherwise, I will never get an opportunity to enter into it. Okay. So that is how the ball game rolls about. And everybody is looking at how to tame the young founders to take certain stake in a company and then make it grow, make it work, and connect with the right set of audience, with the investor, and how the investment round will happen. Okay. lot of the time the founders come, maybe you have all been talking to a lot of founders, and they come, they started the company but they have not done any research work, and then they say that's बहुत मुश्किल हो रही है फंडिंग रेस करने में. The challenge is because before starting anything, you have to research a lot of things. You need to understand the competition, market, industry, who may be the right set of investors in your segment, and what is their viewpoint, what is the philosophy of the investor. These all things do matter. So I would say at times you all may be uh, gone through the same sort of experience. The founder saying, "Sir, I don't know about my projections." Sir, you build 5-year predictions for me and you do the valuation, you bring the number. As a valuer, I cannot do it so. I'm not running a company. You are a owner, you are a running company. How can I say whether you're going to achieve this turnover or not? What sort of the team you are having? What is the expertise you are having? You are running the show. You have to tell me the broad, going into the minor detail, that is fine. I can help. But the question is, I cannot build the top line numbers. I cannot build like, okay, when your company will become profitable. It is you who knows it. You are demanding something from me, which I don't know. So at times, a lot of people say that you build the projections, order, everything is in place, investment already taking place, investors not asking any question. You build what the projections you feel are right. That may not be right enough. Again, bringing the value is something different part, but the question is we need to validate the projection whatsoever provided by the management, because I tell you at times what is happening. I'm thinking the founder has built those numbers. The founder has asked somebody in his team, and that somebody has asked it to the it person who is just being a graduate guy to build this 5-year projection. And he has built something what he feel like based on his whims and fancies. And I been start working based on the projection that we provided. So at least I should need to talk that this is what you provided. The whatever you are saying, that is not syncing with the industry standard. That is not the benchmark of the profit margin that you are talking about. Does not making much sense. You need to build something based upon what is the market talking about, based on the industry segment you are about. In this particular segment, what you're talking about, the profit margin may be roughly 14 to 15%. And you are talking about a profit margin 35%. That doesn't make a sense as per the industry norms. Okay. So this is again, that may be the question point that we need to bring to the investor, sorry, to the founder and make him aware that what is right and what is wrong. And that is a role of the valuer, I would say, to provide an informed knowledge so that he can make an informed decision out of it. Okay. So everybody knows like a startup, it's always been challenging, no historical background, at times no listed peers, not much future visibility. So uh, how to go about, how to look at it? So I would say understand the sector and the segment first. Until and unless I don't know what is the TAM, what is the TAM, what is the SAM, and what is the SOM, total addressable market. Okay, so I don't know, like what is the total addressable market? And then what is the local market that you are starting with? And you have built the hard punch numbers saying that this year 5 crore, next year 15 crores, next year 25 crores, and then directly going to 100 crores. And this is the projection numbers. And these are all hard punch. There is no backing to it. From where these data are flowing? Which is the geography you are going? Which cities you are talking about? From where these numbers are coming? So until and unless that entire spreadsheet not being prepared, from where these numbers actually flowing, it means that their company don't have any business model. And when there's no business model, you are just providing a hard punch numbers, then you cannot able to, as a value whatsoever the learning we have, we never able to judge whether it's right or wrong. I don't know what is the traction, what is the number of customers, what you have done till date, in which city you started it, and what are the number of cities you have in the pipeline. I don't know anything, and just knowing the numbers, if I start doing DCF, uh, garbage input will provide a garbage output. And maybe I've done the exercise, I feel good about it, and I say that, okay, this is my fees. He provided the fees and the work is over. Maybe, uh, uh, but that may not be something which where we feel proud enough to say that this is something what we have done, and we can vet it, we can talk to anybody, even if a new officer calls us, we can go and explain to that person. So a little bit of more detailed exercise that is required while doing the evaluation. At times people say that sir, फीस का कंपटीशन बहुत ज्यादा है, जिसको देखो फीस कोई वो 20,000 की बात करता है. दिस ऑल आई एम टॉकिंग इन अ वेरी क्लोज लूप. दिस इट इज नॉट गोइंग, शुड नॉट गो आउटसाइड. सो क्या करें, इतना कंपटीशन है, कोई पैसा नहीं देना चाहता है. सो until and unless we not able to express ourselves to the founders, what is what we do, how we do, what is the process that we follow, at times maybe some founders may not come to you. They say that, okay, I'm 20,000, I got the report. Why should I go and spend 50,000 rupees? So it all depends upon at what stage you are and what sort of credibility you want to build in the market. And accordingly, the type of the clients that we need to handle. Okay. Somebody may wish to handle too many things, 20,000 rupees, 15,000 rupees report, and making 100 reports. And somebody was saying that 50,000 rupees I charge, I don't go below that. And this is how the things are. So it may be a very relative question. It may not something I would say absolute, but another way, I would say that we, as a valuer, we need to create a value of yourselves. We cannot be like a Excel calculator and providing the work and saying that, okay, this is what we think. When we talk and make him understand, this is the industry that you are in, this is how we can look into, these are my competitors, why you are doing this thing, that thing, then he says that, okay, boss, you are going so deep and you understand it, and you are providing a lot of insight to me, and that's whatever you are charging, that is fine enough. And a lot of founders now understand it. They don't go on to go with somebody who is novice. It's similar to like a doctor, somebody like a child doctor charging 2,500 rupees and somebody charging 500 rupees. But even if you go to look at the doctor charging 2,500, his all slots are full. Maybe a 500 rupee doctor, his slots are not all full. So it all depends upon what sort of credibility we want to build, and that is how the ball rolls around. So actually, if I frankly talk about we being in sitting in a VUCA world, which is volatile, uncertain, complex, ambiguous, and this is the practical reality, because the world is now moving from 4.0 to 5.0. Today, what we do, we type something in the Google, we get an answer to that. I don't get a response directly if I say that Google, hey Google, you do this thing and that thing, and the machine start giving a reply to me for everything. Okay, Alexa may be doing that, means fine. But when the machines start communicating with me directly, then we say that, okay, this is something where we're moving ahead. That is 5.0 industry, that where the machine communicates, okay, where the robots are not what I command, but they also start using the AI function and start responding to the things. So that is where the world is moving. And so we are sitting in something where we are the cusp of change. We are the cusp of transition, and that is where we need to look into, we need to work upon, and we need to uh, this is the time. At times person feel that we have 15 years of experience in valuation, and I may be good enough, I know everything, and then person may be complacent enough, because the question is, every day is a new learning, because new concept, new things coming in the market, and we need to be abreast with that. I would not say that, because as a valuer, there's no need now going again going looking into DCF कैसे calculate होता है, comparable company कैसे निकलता है, these all things everybody knows. The question is now, the rule is to understand more about the industry, market, sector, segments that is going to create more value in the time to come, and then it will create better clients for us as well. When I talk about from the founder perspective, I would say, then investment consideration, क्या देखता है एक investor अगर पैसे डालना है उसको किसी startup में, what he looks at, he may be looking at the founder background. First thing first, there may be a lot of things in this slide, but I would say the founder background, his credibility, what he, how simple he is, how sensible he talking about, that is the first point of contact, and that is the first point that the investor looks into. And then the business plan, potential exit कब होगा, competition, team expertise, team में कौन लोग हैं कैसे, that develops over the period of time. Everybody cannot start with hiring somebody from the IM or hiring somebody from the IIT Kanpur is guy, but he will come eventually. The once you start growing, then the new set of people will start joining, and then we provide certain ESOPs, or maybe certain equity shares, and that is create a certain value proposition for them. And then a good team will start happening in your company. That happens over a period of time. Generally, as a when I saw a real valuation matrix, then DCF all thing is more onto a regulatory side. But as a suppose you are doing the valuation of a company, and if I say you also have to personally invest, what's the valuation you're talking about, or you are providing the valuation report, what you're talking about. You also invest 10 lakh rupees based on the valuation that you are providing. Then there the game changes, because you say, no, no, boss, I will not invest at 10 lakh rupees at this valuation. So the question is what to look into while you're making investment. So from where this valuation number flows. So key VC metrics, I would say, in order to evaluate angel investment, some key metrics that need to be analyzed is the MRR, monthly recurring revenue. Today, somebody talks to someone and says that, boss, you create one invoice for me, and that will create a revenue for me. And then I would say, go to the market and say that, boss, this is my revenue number. And based on revenue, 3 times multiple, the value of my company is this much. So I need to look at what is recurring in nature. It should not be one day or one time that has happened. Monthly recurring revenue, annual recurring revenue. What is the recurring revenue annually that being there? The keyword here is recurring, that is setup fees and other non-recurring revenue streams must not be included. Okay. Second is the average contract value. Average revenue per user. So average contract value is more relevant when we talk about the industry, which is into B2B startup, which are serving in B2B, business to business. And average revenue per user is more common for B2C, direct to the customers, or we can say D2C, direct to customers. So we need to understand these things, and we need to ask certain questions. If somebody, the startup, maybe your friend is starting something and says, boss, you value my company, what should be? So I need to ask these questions. So it will provide a more insight to me. Then another is the CAC, customer acquisition cost. Like suppose there's a milk company called Country Delight. When they started, they're saying that, okay, we'll provide 2 packets of milk free. So somebody say that's free, and everybody start taking 2 packets of milk. So that is what? That is the customer acquisition cost. They are getting your mobile number. They are getting your email ID. Then they can keep on pushing it to you. Okay. So that is a customer acquisition cost, and that is very relevant for every industry. In order to spread or create a visibility factor in the market, there is a requirement that you need to spend something in order to acquire the customer. Okay. At times, you may be standing somewhere. A person comes to you and say, boss, sir, you take this coupon. This coupon is like 2 or 3 days free uh, offer to you going to a hotel. You can go in a year, 3 days free hotel. Maybe you feel that he's providing free. That may not be free because he's taking your contact number. He's taking your entire detail. He looks into the profile of yours. He's seen that, okay, a person guy come with a BMW and he understands that, okay, he is a person of such a profile, he can be pushed n number of things. वो जाके आपका मोबाइल नंबर देगा रियल एस्टेट ब्रोकर को, रियल एस्टेट ब्रोकर को बोलेगा ये हमारे फ्रेश प्रोफाइल्स हैं, दीज आर द 50 लोग हैं जो BMW से चलते हैं या मर्सिडीज चलते हैं, इनका ये प्रोफाइल है, उनको वो 3.5 4 करोड़ 5 करोड़ की प्रॉपर्टी पुश करने लगे. So everything is happening so fast these days. We need to aware, like,
But I,
yeah, please, somebody is saying something. It's good. Anybody wants to come up with something, please come up. Hello.
but now suppose Data Protection Act of Indian government has been passed. So now this kind of exchange of
Yes.
data from one company to another is not possible at all. And I would like to know how to capture the valuation of the database, which has been captured by the app or by giving the lucrative offers. So how we can capture that uh, in our valuation?
It depends upon the type of the company you're talking about. Okay. Suppose everybody is saying that, okay, these days my company is doing something AI driven. Okay. So AI may be the last point. I would say the first point is the data. The more clean data you have, the more analytics you can do on that data, and you can come up with more results and responses. So it all about what there used to be the time when we say like data analytics company, and that data analytics company has now moved from data analytics to AI. AI is what? The data churning. And from the data churning, there are certain results that are coming out. And based on certain result, they are now providing it to the entire world. They are providing it to the FMCG companies. They are providing to everywhere that, boss, you are in this sector. This, I take example, how it works. Suppose you go to a mall. In the mall, there being a big screen, which being there, and the mall, because of the AI enabled thing, the mall is looking at this point of time, at 2 o'clock in the day, what is how many women are here and how many men are here. If they see, okay, there is a 70% women at this point of time, then in that particular screen, the ad will change. They will start reflecting like, okay, lipstick ad or this thing, that thing, which may be more relevant to the consumers who being there at that point of time. If there being more number of men at a certain point of time, the entire thing that changes. So it is like actual tracking what is right now and what we need to serve to them. Okay.
Sir,
So
I understand this is the
uh,
market strategy which is being
uh,
followed by the companies
yes.
to, looking the Reiki and doing the surveys like this. But when we are doing the evaluation, we need to capture the this thing to value our company. So how we are going to value and take this advantage of the data to value the company? How do we how to capture this in our valuation? Because I
Okay.
feel that. The companies, small companies were capturing these data, the big company acquires it. And their main purpose to acquire the company is to get the data and then use the data for their market strategy or whatever they are doing. So, how to capture this data information in our valuation report to value a company?
Okay, good enough. Now this suppose it depends upon the type of the company you are talking about, and suppose if a person coming and saying that I've been developing a company. Just somebody mic is open. So suppose there's a company which is saying that I've been doing the road monitoring based on the AI thing. Unless the data points are not there, that company cannot function well. So I would say first ask, like, what is the data points that you have? How many unique IDs that you have? He says that, okay, already have 2 crore IDs that we have, and these being the verified IDs that been there. So then it will make more sense that what sort of data points he can, suppose take example and another way, more simple way. Suppose you are being running a CA firm and the CA firm is 20 years old. So if I say that what is the value of my firm, I would say that based on the number of the customer, the number of the clients I have, uh, this is the average ticket fees that we have. So over the number of years as well, this is going to be my revenue line that is going to be. Okay. So from where this value is coming, that value is coming actually from number of the clients that you are serving to. Whether in India, abroad, what sort of, again, the question will come,
Sir,
what's,
the issue with the startup is we don't have the revenue. We have the data, we don't have the revenue records. In your previous example, we are running a CA firm. We have historical data, but when we are capturing or when we are acquiring a startup, we don't have any revenue records with them. We just have this company has lot of data because they are giving. For example, there's a startup Free Kamal.
okay.
Free Kamal is a startup which is offering a new product which is being launched in by any company, and they are giving it for, let's say, 80% off, 65% off. So what they are trying to do, first they're trying to do introduce a new product. Second, they are collecting the data. So
Yes,
if
right.
Reliance wants to acquire this Free Kamal company,
Hmm.
so as a valuer, I need to go through the revenue model of
Right,
them.
right.
They don't have any revenue model.
Hmm.
First, second, they have data. So as a valuer, I need to value the data also.
Hmm.
How important the data is for Reliance, let's
Hmm.
say, and then I need to value the company.
Hmm.
So as a valuer, what will be my approach? I understand that data is very important, and data is something which being sold now. The company,
Right.
mm,
Yes.
many of the acquisitions are
Hmm.
there just for acquiring the data,
Hmm. Right.
right?
Yes.
So can you explain in this module how to value, how to get capture that particular data value
Good,
in
good.
my valuation report?
That may be very relevant question that you ask. There, I would say that there cannot be the true value for any data. Okay. Now, suppose, why I've been saying so, suppose I am Reliance. I know that if I have the new set of, suppose, 50 lakhs or 100 lakhs data points to me, okay, which may not be duplicate data, but maybe the unique set of data which is coming now to me. Now, because of that data, how I able to sell or push my existing products or service in the market. Okay. So maybe when I say Reliance will buy that, maybe at a very high price because they feel that, okay, I can push so much in the market. If there being another player who are not having much of the product in the market, okay, then he will go deep and look at in your data, what is the age group that being covered. It may be the young kids, it may be the old guys, it may be the person who being in the age of 30 to 40, and whether this set of people are relevant to me or not. Okay, somebody saying that, okay, this being the age group of 10 to 15, then that may not be relevant for a company who's selling the Mercedes car. So it all depends upon, like, for me, what is the usage or usability of the data. Based on a particular usage ability, the company will pay the premium to that guy who is selling the data. Okay, so there is no one point or single point I would say that this data has a particular tagline or the price tag to it. It depends upon, like, what sort of person want to acquire that particular data.
Sir,
So
here comes the role of valuer. So as a valuer, how to capture and how to value that when it comes to us. For
So
example, this
yes, yes,
assignment has come to us. So as a valuer, how to value, because we need to give some value to that company.
that's what I've been saying. That's what I've been saying. That you need to understand who is acquiring the data. What is the possibility factor of that company to convert that data into revenue line? You're getting a point. Like, who is the person? Who is your client? Okay, he's saying that he's acquiring data. Now, he's acquiring data. What is the product and the service line he's having? So, if he says that, okay, this is my service line, this is what I do, then you look into what is the ticket price of one particular, suppose he sells to one person based on that data, what is the ticket price data what is the ticket price able to sell out to it? And what is the probability factor that may be there? So that's a deep discussion that need to be looked at while analyzing the data sets. Then you can come to that particular solution, and who is the buyer to that data, that may be relevant enough. I cannot say that there is a one price for everything. That cannot be. Okay, if you want to add
I,
anything, you can add anything.
See, I suppose that
Hmm.
we need to capture the utility of data in our
Hmm.
DCF model.
Hmm.
Just like we calculate the goodwill or we calculate some other premium charges, we need to analyze the data available to us and the utility and the essential, the how the essential the data is with that, with the company which is acquiring. We need to capture that in our DCF, in our cash flows.
So how we'll capture that? We'll capture it based on the probability factor. That what is the probability of conversion of this data into revenue number?
So
Because at the
this
end of
this
the day,
data is generally this data is generally given by the marketing team. Say
hmm,
how the important the data is and
yes,
how
yes,
this data will become, we can become more competitive than our competitors by
hmm,
acquiring this particular company.
right,
So as so what the
hmm,
I think the correct solution must be to capture the premium, just like we capture the goodwill, just like we capture the goodwill in the same way or value the goodwill in the same way, we need to analyze this part and capture this utility in our DCF model. The only issue is how to, how to check that DCF, the cash flow. This is the biggest problem which we
okay.
face as a valuer.
So
The company has given that, see, this is the premium, this is the cash flow which we generate if we acquire this company, because we have lot of data, they have
hmm,
lot of data, so we will use the data to
no,
create
no,
more
I
cash flows in our
okay,
company.
okay. Let me place it that way. Suppose a company is acquiring a company, and that company has a lot of data, and suppose that company has data which is into the three different geographies as well. Suppose one is Australia, one is US, and another is UAE. And now the question is, in those markets, what is the product he's selling? What is the usability, that what you said, and what is the probability factor of conversion of that data into the number scale? Because at the end of the day, it finally need to convert into my revenue line. Okay, so my at the end of the day, when I talk about DCF, all my qualitative factors need to be get converted into the quantitative numbers, and those quantitative numbers will actually flow from the scenario analysis, and those scenario analysis will come from the probability factor that we are assigning to that. And that may be certain trends that the market research firm have already carried that. So these all things will get converted into finally the number terms. And that is how we need to look at, like in which particular sector, segment, industry, geography, where from where the data are, and based on that, what can be created out of that.
Yeah, I agree. Okay, thank you.
Okay. Uh, then uh, then we again need to look at, like, what's the churn rate. Like, person may have started coming to you, and then they are now leaving it to you. So we need to understand that what is the churn rate that is happening, that again creates a certain value proposition that we need to understand. Then what is the contribution margin? That is revenue per product unit divided by variable cost per unit. What is the contribution that they're able to create? That is again that needed to be looked at. So these are the certain metrics which helps in understanding like whether the company is doing right, wrong, what the number game should actually flow in my projections, what they've been saying is right, wrong, or correct. Another important factor, I would say, that a lot of the time when we been doing the comparable company analysis and we say that okay, we have taken one particular segment and say suppose the industry I've been talking about maybe the apparel industry. So we get certain reports and which talks about certain industry multiples, and we say that okay, this is the multiple, and we apply that multiple to my company and say that this is the value of the company. But again, if I need to apply a multiple, I cannot directly apply the plain vanilla multiple. The reason being because those companies whom I've been looking at a multiple, these are all listed companies. Okay. So now when these are all listed companies, they have gone to a certain already crossed a certain critical mass and already gone to a different stage now. And certain lot of things already gone into due diligence, everything has happened, and the sizes are also big, economies of scale is there. I cannot compare my small company to those big companies, and I need to provide a certain discounting factor in order to bring it to which is called the size discount maybe. Okay. But one important critical factor when I say comparable company analysis, that generally we look into three factors. It may be the revenue multiple or the sales multiple, it may be the EBITDA multiple, or it may be the PE multiple. Okay. So when I say these multiples,
Odasvi, इसको disturb.
somebody is singing a very beautiful song.
So तभी दे दो
So when I say like multiple, general parlance, PE multiple, we generally ignore the PE multiple when looking into a private limited company. Because when I talk about private limited company, generally the founder, how he looks into at the initial stage of his journey, boss देखो tax नहीं pay करना है. Whatsoever the revenue is, we need to build certain expenses and we bring down the PAT and कम tax pay कर PBT को कम करना है किसी ने किसी पे. So I would say like the revenue numbers के साथ कोई छेड़छाड़ नहीं होती है. Revenue numbers always speak truth. So revenue is fine. EBITDA में थोड़ा सा वो हुआ, I would say कि उसमें थोड़ा सा मिलावट हुआ. एंड देन आई कम टू द पैट, जहां पे वो कहता है कि बॉस, अगर आप किसी प्राइवेट लिमिटेड कंपनी को जो इनिशियल स्टेज पे है उसके पीई मल्टीपल से मल्टीप्लाई कर दे. जनरल तो पीई होता ही नहीं है क्योंकि बिकॉज देयर इज नथिंग लाइक प्रॉफिट एट द इनिशियल स्टेज. बट सपोज after a certain journey, 2 years, the company has certain profit, and if I multiply by profit and saying that multiply by 20 times multiple of a listed company average, then it will not lead to any value then. Okay. The reason being because जो PAT है वो suppressed है. So I would say it's better to look into the EBITDA number rather than the PE multiple number, because for a private limited company there may be certain managed show which may know or may not know. Okay. So this is again one caution point that need to look at. So based on the methodology, everybody knows about like these are the method. I will not go into any of these methods. The reason being everybody knows on the valuation methodology that need to be. When I talk about asset-based method, not applicable in the startups, what to look at, net asset value का देख के भी क्या करेंगे. If I look into relative method, even at a very initial stage, if you're comparing it with a listed company, again, that will not lead to any numbers. So at the initial, maybe 1 year, half-year-old, or maybe 1.5-year-old company, better to look into the possibility of the company in the future. What is the projection? But that projection need to be validated based on the comparable companies, or if the comparable company is also not available, then at least to the sector that you are talking about, कि वो sector किस तरह से grow कर रहा है, कितना CAGR rate से grow कर रहा है, that we again need to look at. Then one again another important factor, we need to look at the industry in a way, like at certain point of time we say that there's a consolidation in the industry happening, and a lot of the big companies, they are like taking the small companies, merging the small companies, or entirely taking the management or taking a majority stake in the companies. Okay, so stage of the business is very relevant when we say look into the valuation perspective. Okay, uh, now this graph may be relevant because there may be times you are doing the valuation, you are placing a terminal value and saying the terminal growth rate is 5%, suppose 4 or 5%. Now the promoter or the management team is saying to you, sir, you have taken wrongly the terminal growth, 4%, 5%. It need to be at least like 8 to 9% because we are so young. There is no company in the market similar to us, or we have a very just company which is doing something but very differently what he is doing, and we are doing something very unique. So they will say that in order to tame the market, there's at least like 10 years, 15 years, still that being a long time when we're going to mature ourselves. So a lot of reasoning they will put to you in order to bring the terminal growth rate to 8 to 9%. I would say that may not be the right way, because if you being into a segment which can grow exponentially, then in that case, maybe 1 year you grow very well. The next year, a lot of competition will come into, because everybody is looking at what is the next ball game, where we need to jump. Every investor is now looking at what is going to be the future roadmap, where we need to invest, where we need to diversify. And the next year onwards, 8, 9, 10 new players will enter the market. And maybe the big companies may also enter into that segment. And then it being very difficult to manage the show over a longer period. My margin will start coming down because of the competition. So somebody who gives a reasoning to this question that, sir, अभी तो हम ग्रो करेंगे, अभी तो हम जो है इतने परसेंट से ग्रो कर रहे हैं, and I will keep on growing like 8 to 9% is the bare minimum, somebody says, then we need to make them aware about the competition in the market. Second, if suppose that may be the scenario that I'm not able to capture my value over a period of 5 years, because every industry is different, the capex model is different for every company. So in that case, we need to apply the H model, okay, high growth model, into our calculation, DCF calculation. So at least like maybe then maybe your company growing at a 20-25% level, and from that 20-25% level, I am not bringing it down immediately to 4 to 5%, because he will say that, boss, आज तो मैं इतने से grow कर रहा हूँ, you are just bringing it down to 4 to 5%. Then I will say that over a period of another 5-6 years down the line, I have applied the H model, brought down from 20% to 10% and then to 5%. That makes more logical in case of the startup companies to apply the H model, rather than just placing the hard stop at the 5th year and saying that it will tumble down to 4%. Okay.
Sir, in case when we are comparing or considering company maturity model or the business cycle, what you just have told, for a startup company, I suppose it is very difficult for even the promoters of the company to decide the business cycle or the company maturity model. So it is one of the major issues
You're right.
because of which we are not able to understand how many years we need to take for the projections. Because
You are right, and that is only the assumption that you can make. I cannot say that this is right, wrong. Maybe that is something we look at, that कोई भी industry अगर start होती है तो कितने साल में वो कहाँ तक पहुँचती है. तो इट टेक्स अबाउट मे बी 7 ईयर 10 ईयर बॉल गेम। आज अगर कोई चीज आई, अगर सपोज ओला उबर आया, तो उसको 10 साल फ्री टाइम मिला कि उसको वो हार्नेस करने के लिए। अब वो एक हमें सेक्टर और सेगमेंट को समझना पड़ेगा कितने टाइम में ये मैच्योर होगा, and based on that we can apply the assumptions. I may be right, wrong, whatsoever it may be, but certain assumptions I can apply and say that was based on certain industry parameter, एक टाइम इतना लगता है, and that is the sweet time to harness, जिसको हम कहते हैं कि जहाँ पे अभी शुगर लेफ्ट है और वो अभी भी इन्वेस्टमेंट राउंड होता जाता है।
So as a valuer, can I mention it in my valuation report of the business cycle? Because I think we should be silent on the business cycle.
There is no need to
Uh,
mention in the regulatory report that
no, when we are talking about and discussing about
business valuation
the
report, suppose.
business,
Correct.
when we are writing a valuation report, we need to
Yeah.
be justifying ourselves, right?
100%. If you can,
And I
that
believe,
that creates more value to
and
you.
I believe it's more of a story rather than numbers, as quoted by
100%.
Ashwat Damodaran. So
100%.
when we are writing a valuation report, should we mention this business cycle thing or not? Because
We need to,
you just have
we need to mention categorically that there are certain qualitative factors that we looked into while writing this report, and those qualitative factors are so and so and so. It may be the stage, it may be the business cycle, it may be like what is the competition. So all these things we need to place it that way, that creates certain credibility to whatever we are writing or what we are, well, the value we are providing to it. Because somebody may say how you are saying it so. Then to the answer to that question, these are the qualitative factors that I looked into. Okay.
now the issue is we don't have any competitor for startup. Let's say there's an innovative startup which is solving some problem through tech.
Hmm.
So we don't have any kind of competitors right now, and there is no projection that 1 or 2 years a new startup will come because of they have a unique research
No
done
problem.
by them. And
Huh.
also we don't know about the business cycle. Just like Byju's, Byju's were like 10,000 crore rupees valuation. Now it's come
Right.
to just 800 odd valuation. I think more
Correct.
less than 800 even.
Correct.
So
So देखो you cannot,
as a valuer, we need
as a
to.
valuer you cannot predict कि बाइजूस को आज जो हो गया वो कोई वैल्यूअर बता देता, nobody can. ठीक है ना? वो तो राइट और रॉन्ग वो तो बात की बात है. बट द क्वेश्चन इज लाइक जो आप बात कर रहे
So
हो
how
कि
to save our skin when we are doing
there is
valuation?
nobody is asking a question to you. आपने जिसने भी बाइजू की
नहीं जैसे
वैल्यूएशन किया
सेक्शन
था, जिसने भी
सेक्शन
बाइजू
टू
की वैल्यूएशन किया था, उसने कोई आपसे नहीं पूछेगा कि आपने बाइजू की इतनी हाई वैल्यूएशन कैसे सर्टिफिकेट
नहीं
इशू किया.
but the problem is section 247 subsection 3 and subsection 4 about talks about the penalty when you have done some negligence on your part.
What is the
So
negligence? What
the
is the
buyer.
negligence? What is
I'm
the negligence you have done?
I'm
Suppose
coming to
Baiju,
the I'm coming to the point, sir. So when we are valuing something, we are writing things in our projection, our report, right? On the basis of which the buyer is buying the shares or you buying the stakes, right? Now the valuation has come down to let's say 800 crores rather than 10,000 crores. So in case the buyer files a complaint against valuer, so how to save our skins in this case?
nobody first of all will file a complaint against valuer. Buyer, nobody as a valuer कि मैंने वैल्यूएशन किया है उस बेसिस पे कोई पैसा डालेगा. nobody will invest based on my value. first thing first, कि आज हमने एक रजिस्टर्ड वैल्यू की रिपोर्ट दी है और उसके बेसिस पे मैं किसी से इन्वेस्टमेंट कराऊंगा, दैट इज नॉट द केस. सेकंड, कि बात आप करना है कि लाइक कि वैल्यूएशन वैल्यूअर को प्रोसिक्यूशन हो जाएगा, ये हो जाएगा, वो हो जाएगा. द क्वेश्चन इज दिस, सर हमने वैल्यूएशन एट अ पॉइंट ऑफ टाइम किया था. उस पॉइंट ऑफ टाइम पे दुनिया पॉजिटिव बात बोल रही थी. आज जो है जब वो समय चला गया, आज आज डिफरेंट सिनेरियो हो गया. कल रिसेशन हो जाए यूएस में, क्या होगा? आज आज जो है कल पूरी स्टॉक मार्केट कल गिर जाएगी. कौन बता सकता है इस बात को? तो मैं क्या कहूँ कि जो है आज जो है स्टॉक मार्केट कल वो हिंडरबर्ग की
So
रिपोर्ट आ
that's
गई.
true when we have macroeconomic. That's
यस.
true when we have a
यस.
macroeconomic change in our society.
यस.
I really accept that.
हाँ.
But in case there are very huge cash flows projections, very high projections are being given to us, and we don't know whether this can be achieved or not. And there are issues with
नहीं नहीं, then
the
हाँ,
growth rate
then
also.
yeah, Ravish ji, then you are
How to
right
save a
कि
skin?
then you are right if suppose somebody is saying that मैं तो अभी कुछ भी नहीं कर रहा हूँ, I am not doing even a zero revenue my company is, and sir आप ऐसा कीजिए कि आप मेरे को जो 25 करोड़ की वैल्यूएशन के एक सर्टिफिकेट बना दीजिए. देन यू शुड सेव योर स्किन कि बॉस आप मेरे को क्रेडिबिलिटी तो दिखाओ ना, क्या चीज है। चलो मैंने मान लिया कि यू डोंट हैव द रेवेन्यू, यू शो मी द पाइपलाइन। आपने किसी के साथ कॉन्ट्रैक्ट इंटर किया, गवर्नमेंट का आपने टेंडर फिल किया हुआ है और आपको वो मिलने वाला है, देयर इज अ प्रोबेबिलिटी फैक्टर कि 10 करोड़ का आ जाएगा, तो देन आई सी द विजिबिलिटी इन दैट। तो वो देन वी नीड टू अंडरस्टैंड कि चलो रेवेन्यू नहीं है बट पाइपलाइन है या नहीं है। अगर कुछ भी नहीं है, आप कहते हो नहीं नहीं मेरे को 25 करोड़ की वैल्यूएशन का एक सर्टिफिकेट दे दिए, देन द वैल्यूअर इज डूइंग रॉन्ग एक्चुअली।
No, no, I'm not saying that,
हाँ।
sir. Actually, what happened recently, somebody came to me with an idea and he
हम्म।
wants to value the idea,
हम्म।
right? So
ओके।
these are the issues which we really feel, we really face when we are valuing a startup.
हाँ, then that is what the real value I've been talking about, कि हमारे केवल अभी वो रजिस्टर्ड वैल्यू सर्टिफिकेट की बात ना करें। व्हेन वी से सपोज वो कहता है मेरा ये, अब मैं उसका आंसर देता हूँ आपको। सपोज ने कहा मेरा ये आइडिया है, आइडिया की कोई, पहली बात आइडिया की कोई वैल्यू नहीं। आइडिया 1 मिलियन आइडिया हो सकते हैं, बहुत अच्छे हो सकते हैं, सब के सब यूनिकॉर्न बन सकते हैं। नेक्स्ट क्वेश्चन, व्हाट इज द एग्जीक्यूशन, व्हाट इज द टीम दैट यू हैव, हाउ यू गोइंग टू एग्जीक्यूट दैट। अगर उस चीज का आंसर आपके पास नहीं है तो उस आइडिया की वैल्यू जीरो है। आप कहते हो नहीं नहीं, आई हैव दीज गाइस हु बीइंग एक्सपीरियंस इन द इंडस्ट्री, 20 साल अमेजन में काम करके बंदा आया हुआ, ही विल डेवलप माई इंटायर प्लेटफॉर्म, he will do this thing, this guy will do this thing, and this is the team we have, then that may have certain value, and then it's okay। तब उसमें आप वैल्यू कैसे देखेंगे, जज करेंगे। तब हम कहेंगे व्हाट इज योर टोटल एड्रेसेबल मार्केट, आप कितने मार्केट को एड्रेस करना चाहते हो। उसने कहा हाँ मेरी ये मार्केट होगी। उसके बाद आपने उसमें से कितनी मार्केट को आप देखते हो। एड्रेसेबल मार्केट में बोलूँ कि आपकी एआई कंपनी वो तो अक्रॉस द ग्लोब हो सकती है, बट अक्रॉस द ग्लोब में आप कहाँ पे वर्क करना चाहते हो, इंडिया में करना चाहते हो, अफ्रीका में जाना चाहते हो, कहाँ जाना। आपने कहा नहीं अभी तो इस स्टेज में हम सबसे पहले इंडिया में हम करेंगे। चलो ओके, इंडिया में करेंगे। नाउ इन इंडिया, हाउ मेनी सिटीज दैट यू आर टारगेटिंग over a period of 2 years, to tell me। He says that over a period of 2 years मेरा जो पाइपलाइन है जो मैं देखता हूँ वो मैं इतनी कम जगहों को इंटर कर सकता हूँ। तो हमने कहा चलो इतनी जगह को इंटर कर सकते हो, वहां का एक क्रिटिकल मास क्या है, कितने नंबर ऑफ लोग आपको आ सकते हैं या कस्टमर बन सकते हैं, उसकी प्रोबेबिलिटी फैक्टर क्या है। तो वो बोलेगा कि इसके लिए हमें जो कस्टमर एक्विजिशन कॉस्ट रखी है वो इतनी रखी है और इस सिटी में हमारा गो टू मार्केट स्ट्रैटेजी ऐसा है। देन वी नीड टू लुक एट कि अच्छा चलो गो टू मार्केट स्ट्रेटेजी आपका ऐसा है बेस्ड ऑन द नंबर ऑफ कस्टमर्स एंड ऑल दिस थिंग्स। हमने कहा कि चलो इसका एक परसेंटेज हम ले लेते हैं। तो बेस्ड ऑन सर्टेन थिंग्स नाउ यू आर लुकिंग एट कि व्हाट द नंबर्स आर एक्चुअली फ्लोइंग। तो एक बेस आपने एक लॉजिक बना लिया। अदरवाइज इफ आई डोंट हैव द लॉजिक, आई डोंट लुक इनटू लाइक द क्रिटिकल मास और नंबर ऑफ कस्टमर्स या कितना एक्विजिशन कॉस्ट है, इतना नंबर ऑफ को अचीव करने के लिए क्या वो कस्टमर एक्विजिशन कॉस्ट को अपने उसमें एक्सपेंस में बिल्ड कर रहा है या नहीं कर रहा है। दीज ऑल थिंग्स दैट वी नीड टू आस्क, understand, and then we can talk okay boss, this can be what is looking at a certain visibility factor that can be created, and even after that you feel that may be a high number, you say that boss मेरे को इसका 50% probability factor लगता है whatever you are saying, so इसको 50% पे टोन डाउन करने की रिक्वायरमेंट है।